87.28. Wow. In the world of technical analysis, a relative strength index, or RSI, sitting at that level, it means an asset is just incredibly heavily overbought. But guys, this is the actual reality for Near Protocol right now, as of late May 2026. And it's all thanks to this massive, honestly gravity-defying 77% weekly price surge.
So obviously it brings up the massive question on literally everyone's mind right now. Is Near Protocol actually a solid investment in 2026? I mean, is this explosive market reaction built on real, rock-solid fundamentals? Or are we just looking at a bunch of speculative froth that's completely ready to pop?
Well, I am so glad you're here today. In this explainer, we're going to unpack the whole shebang. The data, the underlying technology, and the market forecasts surrounding Near Protocol to figure out exactly what is driving this massive surge. So if you're looking for a clear, highly structured breakdown of where this network stands today, you are absolutely in the right place.
Okay, here's our roadmap. First, the May 2026 Near rally. Second, solving the blockchain bottleneck. Third, the AI infrastructure pivot. Fourth, the bull case versus the bear case. And lastly, price predictions and timelines. All right, let's dive right into this.
Section 1, the May 2026 Near rally, from the bear market depth to a $2.80 recovery.
Now, to really wrap our heads around this current hype cycle, we've got to address the elephant in the room, right? And that's the incredibly wild historical ride Near has been on. So let's rewind. Back in the 2021 bull market, Near hit this explosive all-time high of 1460. Unbelievable. But then came the absolutely devastating bear market collapse of 2022. That pushed the price all the way down to a painful $1.25. And honestly, 2025 wasn't a whole lot better. It just kind of saw this continued decline, averaging right around $1.50. But then, wow, look at 2026. After finding some baseline support around $1 early on, late May just saw this almost vertical price surge, shooting the value all the way up to around $2.77.
But hold on, before we start popping champagne, we really need to look at what's actually fueling this rocket ship. Get this, open interest for Near futures just hit a record 309 million tokens. So, what does that actually tell us? Well, it tells us there's a massive amount of incredibly risky speculative leverage sitting right there in the market. Traders are literally piling in using borrowed money, which means, yeah, sure, the sentiment is super bullish right now, but the risk of a very sharp, very sudden correction, it's incredibly high.
Moving on to Section 2, solving the blockchain bottleneck, the engine of tech and tokenomics.
All right, let's completely shift gears here and take a peek under the hood, because we need to know if the actual technology justifies all this crazy price action. Now, at the very core of Near's value proposition is this thing called nightshade sharding. If you're not super familiar, think about it like this. An older blockchain is basically like a grocery store during rush hour, but they only have one single checkout lane open. Everyone's just standing there, waiting in line. Sharding, on the other hand, is like the manager suddenly opening up 10 new checkout lanes all at once. By chopping up the blockchain's activity into these smaller segments, or shards, the network can suddenly process a bunch of different transactions simultaneously. It's a total game changer.
The architectural contrast here between the two is just stark. I mean, older traditional blockchains are stuck relying on sequential processing. Basically, transactions have to happen one right after the other, which is exactly what causes that awful congestion and those sky-high gas fees during peak times. But Near, because it's doing simultaneous transaction processing across all those different shards, it pretty much completely eliminates that bottleneck.
And what's really cool is that this tech isn't static. It's actively evolving. In June 2026, Near is scheduled to roll out this massive dynamic resharding upgrade. What that means is the networks can automatically monitor user demand and then just split those data loads right on the fly, seamlessly handling millions of actions. So the crucial point here is, this isn't just some theoretical concept buried in a white paper somewhere. No, this is a highly practical, automated boost to scalability that directly benefits everyday users.
Okay, but we all know that even the greatest tech in the world needs great tokenomics to back it up, right? Well, the standout number here for Near is 2.5%. They successfully have their annual token inflation right down to 2.5%, and honestly, even better than that, 100% of the token supply is now fully vested. That means there's no secret, hidden stash of tokens just waiting to be unlocked by the founders or early VCs to suddenly flood and crash the market. When you put that together, it creates a really highly favorable supply and demand setup.
All right, Section 3, the AI infrastructure pivot, the differentiator for Web3 agents.
Now, this is where the story gets really, really fascinating.
And frankly, it's the main narrative that's actively separating Near from all those other Layer 1 chains out there. You have these hugely influential figures in the crypto space, guys like Arthur Hayes, and they are explicitly calling Near the blockchain for AI. In fact, he's projecting a massive 20x upside potential here. The market is slowly waking up and viewing Near not just as, a place to launch digital art or meme coins, but as the actual foundational infrastructure layer where decentralized autonomous AI agents can operate and transact.
Now, you might be sitting there wondering, okay, is this just some sudden marketing gimmick? Are they just trying to hop on the AI hype train? And the answer is not exactly. See, Near was co-founded by Ilya Polasukin. And who is he? He's a former Google AI engineer. So the network's fundamental DNA has actually been deeply rooted in artificial intelligence since day one. It's a real structural engineering advantage. It absolutely sets them apart from all those other networks that are just frantically scrambling to pivot right now.
Which brings us to Section 4. Bull case versus bear case, the reality check.
Okay, so we've looked at the hype, we've looked at the tech, now we need to step back, put on our objective hats, and pit the bullish catalysts right up against those very real bearish risks. So looking at the bull side, we've got that completely unique AI infrastructure focus, we've got drastically reduced sell pressure because of that fully vested token supply, fantastic sharding technology, and some serious institutional money starting to flow in. But let's look over at the bear side because it is heavy. They are facing massive, deeply entrenched competition from absolute giants like Ethereum and Solana. Plus, we have that super dangerous 87+ RSI we talked about earlier, which screams market froth. Combine that with just general altcoin volatility and the stark reality that predicting long-term dominance in crypto is basically impossible.
Seriously, when you look closely at the sheer size of these ecosystems, the reality hits hard. It really doesn't matter if Near has technical superiority or this brilliant AI pivot. Ethereum is still the reigning heavyweight champion of the world, with Solana right there on its heels. Is Near growing? For sure, but it is facing one incredibly steep uphill battle if it wants to steal actual developer market share away from those established giants, because at the end of the day, having the best tech doesn't automatically win the game. Adoption does.
Finally, Section 5. Price predictions and timelines. The forecast out to 2050.
All right, let's put on our futurist goggles and see exactly how different analytical models are pricing in everything we just talked about. Let's start with the immediate targets for 2026. Right away, you'll see a massive variance depending on the methodology each model uses. Digital coin price? They are playing it highly conservative, warning that we could potentially see a drop all the way back down to 58 cents, capping their max around $3.45. Then you have price prediction, which is sort of moderately bullish. But then, look at Telegon. They are modeling out this incredibly aggressive scenario where Near somehow reaches between $8 and almost $15 just this year alone.
And honestly, this brilliantly illustrates just how incredibly difficult long-term forecasting is in the crypto space. I mean, just look at the wild divergence here as we stretch the timeline out to 2030. You've got one model predicting Near will completely tank, dropping below 50 cents. Another model has it just kind of chilling, hovering around $5. And then Telegon's model, which clearly assumes this whole AI narrative is going to play out flawlessly, is predicting a truly massive surge, placing it somewhere between $45 and $56 per single token.
Finally, let's take a wild leap and look at the extreme, long-term possibilities for 2050. These numbers are just staggering. I mean, we are talking a range anywhere from $28 to an absolutely mind-blowing $421. But please keep this in perspective. For those massive, triple-digit numbers to actually become reality, it assumes an absolutely flawless, literally decades-long execution of Near's entire Web3 and AI strategy, all without getting overtaken by some newer, shinier technology that hasn't even been invented yet.
So after looking at all that, what should your main takeaway actually be? Well, the golden rule here is pretty simple. Don't just sit there staring at short-term price charts or sweating over high RSI numbers. Watch the developers. Seriously, more developers building apps directly leads to more transactions on the network. And more transactions mean more network fees get burned and consumed, which is what organically drives that long-term token demand. That right there is the absolute fundamental engine of growth for this whole ecosystem.
So I'll leave you with this final thought to chew on. Will Near's aggressive pivot into AI actually give it the edge it desperately needs to outpace absolute giants like Ethereum and Solana? Or is this whole 2026 rally we're seeing just another fleeting wave of speculative hype? Definitely keep a very close eye on that upcoming June resharding upgrade, because how smoothly that rolls out is going to tell us a whole lot. Thank you so much for hanging out with me today for this explainer. Keep learning, keep questioning, and I'll catch you in the next one.